Hello there, welcome to this video slideshow presentation all about how the Reserve Bank of New Zealand, the RBNZ, gave up the fight. That is, gave up the fight against inflation. Yesterday, 24th of May, 3 p.m. local time, the Reserve Bank of New Zealand, the Central Bank of New Zealand, decided that they are no longer, and they announced this, no longer going to put interest rates up. In this presentation, I'm going to go through what happened, what this means for financial markets, and more importantly, as a trader, as an investor, the trading opportunities this could present, how we can make money from this. This has already and will create trading opportunities to make money against the New Zealand dollar and potentially other markets and other currencies. If at any point in this presentation I say something that you disagree with, maybe I've already said something that you disagree with, let me know in the comment section below. The more opinions that are shared, the better. If there is debate, different fundamental views shared in the comment section below, it just makes it more helpful for those watching this video and those reading the comments below. So what actually happened yesterday? What do you need to know? Number one, the Reserve Bank of New Zealand, the Central Bank of New Zealand, raised interest rates yesterday. As I said, 24th of May, 3 p.m. local time. They raised rates by 25 points, as expected, 0.25%. What wasn't expected is then they announced that they currently don't plan to raise rates any further, and potentially next time they make a rate change, it's going to be a rate cut. The New Zealand dollar fell and has fallen again today. It is bearish. People are selling the New Zealand dollar because this is not good news for the New Zealand dollar. As most traders know, as most investors know, central banks have been hiking rates for a year now, for over 12 months, to tackle high inflation. In New Zealand, as well as some other countries in the world, that inflation has been very sticky. You can see that I have a barbecue sauce icon with my high inflation. It's very sticky inflation. It's not coming down, and we'll have a look at some figures in a moment. It seems that the rate hikes that the Bank of New Zealand, the Central Bank of New Zealand, have been doing are having very little impact on inflation. Inflation is not coming down as expected. So they're giving up the fight, which is crazy. And we'll talk about that again in a moment. But that's basically the scenario. That's what happened yesterday, and that's what's caused the New Zealand dollar to fall. Basically, what the Central Bank of New Zealand, the Reserve Bank of New Zealand, are saying: high inflation is the new norm. We're not going to fight it anymore. You need to just get on with it and deal with it. That's my take on what they said on their decision to no longer raise rates, is they're giving up the fight. Inflation, high inflation, is here to stay. And that is not good for New Zealand. Let's move on to the next slide. So on this screen, we have inflation rates back to September 2021. You can see we hit a peak of inflation at 7.3% in June 2022 and haven't come down much since then. So we came down slightly in September. We came down again by 0.5% in March and haven't really changed. Things are not going very far. These inflation rates are generally released quarterly, whereas other economies release them monthly. That's why they're kind of the same every 3 months. If we look at the interest rates from June 2022 had just been rising, increasing almost every month. So monthly, the interest rates have been going up. We're at 5.5%. They've gone up by 3.5% since June 2022, and inflation has come down by 0.5%. This inflation is too high and it's far too sticky. It's too stubborn. It's not really coming down. We have this same issue in the UK and in other countries, South Africa, Denmark, Sweden. this very sticky high inflation that's not really coming down as far as it should do. Whereas other countries seem to be doing well, other economies seem to be doing well, like the US. We're nearly back at that 2% norm. Not quite there, but we're definitely heading in that direction, or the US is heading in that direction. So with New Zealand, as well as some other economies already mentioned, inflation is not coming down. Now, the Reserve Bank of New Zealand has taken the decision to no longer raise rates. That is not a decision that the Bank of England have taken or the RBA have taken yet, but that could come, and we'll talk about that in a moment. Now, what we also have in New Zealand is low unemployment. It's too low. We have low manufacturing PMI. There is good GDP growth. There is some saving grace there, but things are not looking good for New Zealand. And the Reserve Bank of New Zealand's decision to no longer increase rates is only going to make things worse and could be a driving force that brings the New Zealand dollar down further. I am bearish the New Zealand dollar. I was anyway. And now my bias is even more bearish for the foreseeable future. Let's move on. Once again, use the comment section below if you have anything to add. If I've missed something, you feel I've missed something, or you disagree with something, let me know. So what does this mean for other global economies? Obviously, the New Zealand dollar is going to fall. What other trading opportunities could this create? Well, the Australian dollar is positively correlated with the New Zealand dollar. We've already seen an Australian dollar sell off, and that could continue. I am bearish the Australian dollar and the New Zealand dollar. It could be that the Reserve Bank of Australia, the RBA, the Central Bank of Australia, follows suit. We could see this happen. The neighbours. It could be that the RBA take a very similar stance to the Reserve Bank of New Zealand. It's not as likely as it may sound, because that high inflation is not as sticky in Australia. It's still high, but their inflation seems to be coming down with interest rate hikes. But we could see other central banks follow suit. There is no reason why the Bank of England might turn around and say something similar. We can't beat this high inflation. We're going to stop raising rates. If you hear the Bank of England make that decision, you're going to see the pound fall. The same with the Swedish krona, the Danish krona, the South African rand. Any of these countries, any of these economies that are facing high inflation, that is very sticky, that is not coming down, we could see this decision made in other economies by other central banks. Now, it's very early days, and that's quite a controversial thing for me to say. Not many people will be thinking that the Bank of England are going to follow the Reserve Bank of New Zealand, but it could happen. It's on the cards. The RBNZ have done it. Why can't others follow suit? So to summarise, what trading opportunities could this present? Number one, obviously selling the New Zealand dollar. Number two, selling the Australian dollar. Number three, pay attention to what other central banks may say in coming weeks and months. What are we going to trade the New Zealand dollar against, the Australian dollar against? The US dollar is the obvious choice. Inflation, like I said earlier in this presentation, inflation is coming down. It's heading toward that 2% norm. Economic figures are looking very good for the US. Selling New Zealand dollar, US dollar, Australian dollar, US dollar seem like key trades. I wouldn't personally be buying, say, the pound against the New Zealand dollar, because things don't look great for the UK. So let's have a look at some charts. So first of all, I have the New Zealand dollar, US dollar weekly chart. You can see prices coming down. That big bearish candle, the current candle, has been formed because of this decision made by the RBNZ. I think prices are going to continue to fall, that things will continue to be bearish. Obviously, there's going to be some respite at times. We're going to see some sort of bullish retrace move, but I will just keep looking for opportunities to sell the New Zealand dollar against the US dollar. And here on the daily time frame, you can see we've broken some key support levels, and there's really not much support now from about 61 down to 55.5. So it could be that we see the New Zealand dollar, US dollar push lower down to that key technical level around 55.5, 56. New Zealand dollar yen, we're in this range. I really think the yen is going to be the secret weapon of late 2023, maybe 2024. I think it's heavily undervalued. I think we've got yen strength coming. New Zealand dollar yen, we could see a break of the current range around the 81 area, and then prices to move below that consolidation. Looking at New Zealand dollar, Canadian dollar, economic figures are now looking a bit better for Canada, so we could see some Canadian dollar strength, at least to the 81 area. We could see price fall even further. I have no plans to buy any of these pairs at any of these key technical levels. Any of these support levels marked on the chart do not create buying opportunities. They're simply just technical respite areas where price may form a retrace move off, a temporary bullish move off before price then swings lower. Hopefully this presentation has helped. It's very exciting to see what happens next. Obviously fundamentals can change very quickly. It could be that this time next month things really turn around for New Zealand and the bearish momentum comes to an end. But at the moment it's just sell, sell, sell. There is no reason to be buying the New Zealand dollar.